Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. And happy Friday. It's Friday, April 6th. This is the big day we've been waiting for on jobs reports for the month of March. So let's delve right into it here. Wow, as you can see here, pretty big change here. Now, for the month of March, or for the month of February, we had 326,000 jobs created. Now, we had a couple revisions. Uh, in February it went up 13,000, but in January it was a downward revision of 63. So that's a total of 50,000 total new jobs were downward revised. So that's basically a take minus 50,000 from the new jobs created so far this year were taken off the books here. Now, forecast for this month was about 170,000. I've heard anywhere between 170 and 180,000 for a forecast, and it came in really disappointing at 103,000 here. Now, some people think it might be attributed to the tight labor marketing. We've been kind of seeing that concern based on the index by the Small Business Index, which has been one of their biggest concern has been finding a good fit for for employment here and getting that workforce out there. Jobs have been created, but we're finding again the issue of finding people to take those jobs. Labor unemployment rate, we have a 4.1, and we thought it would dip down because actually a lot of people thought that forecast was rather low and it was going to be exceeded, and it remained at 4.1%. Now the U6, however, did dip. It went from 8.2% down to 8%. So that's a good news right there. A lot of people think that's actually uh, you know, more of a better use of number. The U6 is more accurate reporting than what we see being reported here. And last but not least, we got what they call the average hourly earnings. And if you've been listening to my reports this week, I said this is one to be careful of. Now, the average hourly earnings report came in at 0.1% growth in the month of February. Forecast for March was at 0.3%, and it came in right at forecast. Now, year over year, it did have an uptick of 2.6 to 2.7%. So right now, this is what's kind of driving it. And again, could be higher wage inflation. You may see this talk later down the line. This is what set off the markets back in February, and when the average hourly earnings went up and creating that inflation-based talk. So be cautious here of possible inflation talk here. Now, stock market is down. They didn't like the numbers on there, but it's not just based on what we saw on the jobs numbers, but there's an announcement that President Trump is talking about tripling now, basically the new tariffs on China, talking about another hundred. So right now there was talked about $50 billion. Now he's talking about an additional $100 billion. So basically tripling what we got against China. And of course, China is talking about retaliation. So if we come out with another round of tariffs, they're just going to come back and retaliate the same thing, which could escalate into much more of a escalating trade war here. Now, later today, we got around 10:30 Pacific Standard Time, Mr. Powell, who's the Fed chair, will be speaking in Chicago at a conference there. And, anything, depending on what he says, especially if he talks about inflation, that could move markets a bit as well. But right now, the big, focus is on, of course, this escalating trade war with China, if it evolves into anything right now. But this is what's kind of spooking the markets a bit. So let's see how this is affecting the bond market, and the bond market's actually doing quite well. So what's going on is the stock market, the money is coming out of the stock market and going to a flight of safety, which is the bond market, and this is helping us the bonds right now. So as you can see, we've been kind of in this sideways pattern a little bit. Meanwhile, the 50-day moving average is coming down. 25 is coming up a little bit. It's going to get some point squeezed here. We've had some pretty volatility days. You see these long wicks here created here. We're even up a little higher. Currently, we're up about 16, 17 basis points here, which should give us better pricing today for interest rates. So interest rates should be improved. But again, this is early in the morning and things could change quickly. So just be very cautious throughout the day here. We did warn about locking in yesterday, and I still kind of hold that. Just be very cautious here, especially if it comes back that they get concerned about inflation. Start shrugging out the talk about China, and then maybe they start thinking about inflation. So things could quickly change in the markets here. Yields, yields are breaking below. So we did break above the 50-day moving average, but the 25-day held. Today it pushed it down below the 50-day moving average, as you can see here. And this is with these guys coming down here, it's going to create a double resistance, so it could be a little more difficult for yields to get past in the meantime. So we're down to a rate of about 2.78 right now. So that's also helping the bond market as well. Again, for so far this morning, bonds are looking good, but again, that could quickly change, so just be very cautious out there heading into the weekend. Otherwise, if you guys want to get more updates, just come over to Twitter. I will be posting throughout the day on there, so if there's any big swings you don't want to miss out, just come over to Twitter, follow me at Mike Bjork, and you'll get your full scoop for the day here. All right, guys, I hope you guys have a great day. Enjoy your weekend. Thanks so much for watching. I look forward to see you guys on Monday. Bye-bye.